Should you invest in index funds or in stocks? Index funds have definitely become super fashionable recently, mainly because it removes you as an investor from the driver's seat and allows you to track the market without really knowing much about investing. Today, I'm going to bring about an unpopular opinion and show you the reasons why I personally invest in individual stocks as opposed to index funds without sacrificing my time or risking more than I can afford. Disclaimer, I'm not a financial advisor, and while I have studied and completed my education for the Certified Financial Planning or the CFP degree at NYU, along with the Chartered Market Technician, among others, I chose not to become a money manager or register with a broker simply because as I was studying for these things, I realized that absolutely anyone and everyone should become their own financial advisor. And these topics should be mandatory at schools. Unfortunately, they're not. And that's why I stepped in and I founded the Invest Diva Movement to help you take control of your financial future and make your money work for you at your own terms without having to be at the mercy of a fund manager that may or may not have your best interest at heart. While investing in an index fund is better than not investing at all, and it could be a great starting point for you, you may be missing out on some things, and some of them aren't even about money. Please watch till the end, and if you think that this makes sense, give this video a thumbs up. If you think that this doesn't make sense and I'm just being annoying, you can go ahead and give it a thumbs down. We're going to cue in the intro and dive into stocks versus index funds and the 4 reasons why I personally avoid index funds. And while we do that, head over to the comment section and tell me where you are watching from. Let's go. Hey guys, I'm Kiana Danielle, 3-time author and the founder of the Invest Diva Movement, the march to jump on to take control of your financial future and to make your money work for you. Index funds are all the rage these days thanks to the modern portfolio theory, which suggests that markets are efficient and that a security's price includes all available information. Index fund advocates all over the internet argue that active management of your portfolio is useless, and you'd be better off simply buying an index and going along for the ride. And I'm here to say, and look at some of the reasons why it isn't always the best choice. Let's dive into the 4 reasons why I prefer stocks to index funds. Reason number 1 is that with index funds, you won't have downside protection, and some individual stocks actually way outperform the index fund in the long run. There's obviously no denying that the stock market can be very, very volatile, right? Investing in an index fund like the ones that track the S&P 500 will give you an upside when the markets are doing well, but also leaves you completely vulnerable to the downside. You can choose to hedge your exposure to the index by shorting the index or buying a put against the index. But because these moves are the exact opposite direction of each other, using them together can defeat the whole purpose of making money. This is actually just a break-even strategy. So you can end up with no increased value at the end. Plus, you probably would have to pay commissions anyway on it. With the stocks, I can simply buy more as the price drops, given it's a good value stock, and enjoy the profits later while being patient and not panicking over each and every bump in the road. When it comes to stocks, patience is a profitable virtue. Reason number 2, you have no control over your holdings in an index fund. Indexes are set portfolios. If you buy an index fund, you have no control over individual holdings in your portfolio. You may have specific companies that you absolutely love and you want to own, but there are also companies that you probably had a bad experience with or you just don't want to support them. Investing in an index fund is like buying those wholesale surprise Christmas bag of toys that comes with like 30 different items, and you might find a couple of valuable stuff in them, but most often than not, the rest of them are just crap. Also, please keep in mind that by investing in any company, you are making a statement. You are supporting that company's political views, social responsibility, and morals. Personally, there are assets and companies that I would never invest in, simply because I feel strongly about how they impact the environment. Even commodities can fall into this. So just to give you an example, and this is not about stocks, but for me, oil. is actually one of them. I don't invest in oil or anything related to oil. Being from Iran, I know how much misery oil has created for the people in Iran by giving the Iranian regime so much power and giving the other countries a reason to bully and create all these wars in the Middle East. So I didn't even buy oil when it dipped below zero. This was just an example. And with an index fund, you won't have the ability to say no to a singled out item. Reason number 3 is that individual stocks are too risky is a myth. This is the big one that people always get back at me about. But Kiana, isn't investing in stocks risky? If you've ever heard the stories about how somebody lost a bunch of money in the stock market, you'll probably relate to this. So back when I first started on Wall Street, I actually became a reporter at the New York Stock Exchange on Wall Street. And of course, I was dying to dive into the markets and start trading and investing like I'm sure you might be right now. But since I was just learning, I didn't have much experience actually investing or trading in the markets. I was listening to everybody and all the gurus on the floor and following what they were doing. I was supposedly surrounded by the best investors out there who were trading at the floor of the New York Stock Exchange, right? So I got confident and I went all in with my $15,000 account. And I was super excited to get started with this account. And at that time, $15,000 was a lot of money for me. But I was optimistic that what these investors and fund managers are telling me is going to work out for me, right? Well, that actually didn't go too far. I kept following what everyone else was saying and followed the market. But can you guess what happened? I lost the whole $15,000. Yep. I lost my entire savings. And I was so upset and disappointed in myself. I mean, like, how could I lose all the money when I was just listening to the fund managers and to the people who were making millions in the markets, right? So just about that time, someone called Guy Spire, who turns out to be in Warren Buffett's inner circle or something, reached out to me after he saw a video of me on LinkedIn. And he came to me and said, "Hey, Kiana, it looks like they have a ton of potential, but I think you're doing this wrong." And I was like, "What do you mean? I'm just doing what everyone else is telling me to do." And he said something that changed my life forever. He said that you've got to stop trading and you have to start investing. And some of you might now be thinking, okay, aren't trading and investing the same thing? And the answer is absolutely not. So what I was doing when I lost that $15,000 was trading. I was trying to make a quick profit on the market's ups and downs, which is always very high risk in the stock market because guess what? It is volatile, right? But here's a quick chart to show you the differences between trading and investing. Trading is always high risk because you're trying to guess and speculate whether the stock will go up or down on a day-to-day basis. Investing, while there's always risk involved, is typically lower risk because you're choosing investments that will increase in the long term. And remember that the market value increases 10 to 12% each year on average anyway. And trading is done with a short-term goal in mind, while investing is a long-term goal. Now, when people often get into trading, they're hoping for a get-rich-quick method where they can quit their job and go live on a beach somewhere, which is why they end up making very, very risky trades and lose all of their money. Investing, on the other hand, is intended to utilize the current surplus of cash that you have and use it to build that into more wealth. The only people that can actually make money by trading and managing these index funds are the ones who put millions of dollars into the market and are glued to their screen all day. If you start small when trading, chances are that you'll get kicked out of the market just like I did, faster than you can make any money. But when you invest, you can start with a little initial amount without risking too much and slowly grow your portfolio. And I have put together an awesome masterclass to walk you through the exact steps that I take to invest in individual stocks that outperform any index fund without being stuck to my screen all day, and even though I actually really suck at math. So if you haven't already, open up a new browser and go to learn.investdiva.com/yes and register your seat for my free masterclass so that you can watch it after this video. Let's get to reason number 4 of why I prefer individual stocks to index funds. And that is you won't be able to create investment strategies based on your own unique financial situation, your own unique risk tolerance, and your unique financial goals. Investing is very personal. What works for me may not work for you. My ability to take a risk and my willingness to take a risk is different than yours. You probably aren't the same exact age as me. You don't live in the same exact house in the same exact neighborhood with the same exact husband and kids. That would be weird, right? And that truly is the reason why I chose not to become a money manager and to help people create investment strategies that are unique to them. With an index fund, you won't be able to do that. You have to blindly follow whatever that index tracks. And while it could give you diversification, it may not be optimal for your needs and financial goals. Do you need dividend-paying fixed income? Can you wait out a growth phase of a promising value stock? Are you approaching retirement and need more stability? With an index fund, you won't get to have a say on any of that. And I do all of this for my portfolio, my husband's portfolio, and my dad's portfolio with only 1 hour per week spending on strategy development and portfolio management. Because once you get the fundamentals down, it won't take you all that long to monitor your very own customized portfolio that is not locked in a wealth manager's fund and consists of a ton of random stuff. So you guys, this was simply my experience and my opinion on why stocks and investing in individual stocks can be better for you in the long run than only investing in index funds. And if you're too scared of starting out investing in individual stocks or other assets for that matter on your own, I have put together this awesome masterclass, you guys. You've got to register your seat for it. If you haven't already, go ahead, go to learn.investdiva.com/yes, register your spot, and I would love to see you in the chat box over there. Now, before I let you go, I'd love to hear from you. Are you investing in index funds right now? If you are, what are some of your favorites? And are you investing in stocks right now? And if you are, what are some of your favorites? Head over to the comment section and let the conversation begin. I'm open to all of your suggestions and ideas and questions. And if you leave me a question, I might even answer it in my next YouTube video. Go ahead and give this video a thumbs up, share it with your friends, and don't forget to subscribe to this channel. And remember, the only path to true wealth is by making your money work for you.